Hello, everybody. Welcome to today's episode of the Daily Dose. Today is Thursday, October 13th. This one is definitely going to be a little bit shorter than normal because I'm limited on what I can do today here on my laptop. I'm actually traveling right now. I'm out of town right now as I record this for a wedding. So today and tomorrow I'll be out of town. So there might be brief episodes, but I wanted to get something out nonetheless. And if you like this content, be sure to subscribe on YouTube and follow us wherever you listen to podcasts. So let's get into it. So today was the CPI number. It was expected to come in at 8.1% year over year, and it came in at 8.2%. So it came in a little hot. It was 0.4% month over month. So it was a little bit higher than expected. And initially, the market tanked. As you can see, we came all the way down to about the 34.92, so we cracked below 3,500, and then we really rallied through the rest of the day. I mean, just huge, massive candle right here, and we didn't break out of this zone. We actually did sell off a little bit at the end of the day and closed at 36.69. So it was a mixed reaction today, and I'll get into more of this tomorrow, but the market typically does see a rally in the end of the year, especially in a midterm election year, and especially in a time like this. I think people in the government are incentivized to maybe encourage something like this to happen, but the market didn't necessarily react in a rational way. We're also due for some kind of bear market rally, as we've just been sliding pretty aggressively for the last couple of weeks, and so it would make sense for us to see some rallying, despite what the CPI number said. Initially, the market reacted in a way that made sense as far as the Fed's reaction to the numbers that we've gotten this week. I think that they still expect the Fed to continue this tightening cycle and continue as aggressively as they've said that they're going to. And obviously that's not good for equities. So again, we'll have more time to talk about this tomorrow, but we did actually rally throughout the end of the day. I don't think that has any long-term significance, but we did actually come all the way back up to the top of this zone here. And then on Bitcoin, we're still below that trend line that we've had mapped out. So you can see that on the wick today, we did come all the way down with the market to about 18.3 on Bitcoin, came back up, almost touched the trend line, and now we're just kind of sitting at the top of this zone, in between this zone and this trend line, and it's getting pretty compressed. So I wouldn't be surprised if we see a big move soon on Bitcoin. I'm going to have to wrap it here. I really do appreciate you listening to today's episode. I do apologize for it being a little bit short, but I am really limited with what I can do right now, but I did want to get something out, so I appreciate you taking the time to listen to this episode. I hope you at least got a little bit from it. We'll definitely talk more about the CPI number, what that means for the future of this market tomorrow and this weekend for sure. I do have some stuff planned for that, but until then, thank you for listening, and I will see you in the next one.